So if you were to put a brilliant PhD level mathematician and I don't know, an average high schooler in front of a trading terminal
Right.
and you gave them the exact same strategy and told them to trade for a year, there is actually a staggering probability that the genius will blow up their account first.
Which is crazy to think about.
It is, and it's not because the teenager is, better at math. It's because, and this is a wild statistic from our source material today, 90% of traders do not lose money due to a flawed strategy. They lose because of their own emotions.
Yeah, and that just, well, it completely upends the way we traditionally view financial markets.
Yeah.
I mean, we're taught to think of trading as this purely analytical, a hyper-rational chess game, right?
Where the smartest person in the room just automatically wins.
Exactly. But the data shows us something very, very different.
Okay, let's unpack this. Because today's deep dive is, well, it's a full exploration into the psychology of trading. We're specifically looking at how we master discipline over emotion. We're taking all this research, the market data, behavioral psychology, and our mission today is to figure out why incredibly analytical people make such terrible, destructive decisions with their money under pressure.
And, more importantly, how you can build an unbreakable emotional shield to stop that from happening.
Exactly, because we often think of the market as this opponent sitting across the table, but the reality is the real enemy is actually inside your own head.
Yeah, those internal adversaries are the silent account killers.
Hmm.
I mean, we aren't talking about bad algorithms here.
Right.
We aren't talking about sudden macroeconomic shifts or, Fed rate hikes. We're talking about fear, greed, fear of missing out, and that overwhelming urge to just revenge trade.
Right. So to understand how to win, we first have to really understand the underlying mechanics of why we lose. And that usually starts when you hit a drawdown.
Oh, absolutely.
When your account is just bleeding red, plummeting from its peak, your brain doesn't just see a math problem, it sees a predator. And I really want to dig into the biology here because the research points out that your brain reacts to losing money in a way that is strikingly similar to actual physical pain.
What's fascinating here is the neuroscience behind that reaction. Because, we are operating with brains that evolved for the savannah, not the stock market.
Right. Our brains are still dodging lions.
Exactly. So when you experience a financial loss, your brain's pain matrix lights up. Specifically, there's this area called the dorsal anterior cingulate cortex.
Okay, that's a mouthful.
I know. But it's the exact same region that processes the physical pain of a broken arm or like a burn.
Wow. So it literally can't tell the difference.
It doesn't distinguish at all between a physical wound and a depleted bank account.
Yeah.
Because in the modern world, a financial loss represents a literal threat to your survival. Your brain just says danger.
So experiencing a drawdown is biologically indistinguishable from accidentally touching a hot stove. But, why does the intellect just vanish? If you touch a hot stove, you pull your hand back. But you don't suddenly forget how ovens work, right?
Right.
So why do these highly intelligent people just abandon years of research and strategy just because the numbers dip? Does the brain just scream, pull back, or fix it immediately without any logical thought?
It does. And it's because of what we call an amygdala hijack.
Amygdala hijack. Yeah.
Okay, so when that psychological pain hits, the amygdala, which is this primitive emotional center of your brain, it just floods your system with cortisol and adrenaline.
Oh, wow.
And it effectively overrides your prefrontal cortex. That's the logical, analytical part of your brain. So your intellect isn't just, ignoring the strategy. It is quite literally taken offline.
Shut down.
Completely. You shift from execution mode directly into survival mode.
It's the fight or flight response, but applied to a brokerage account. Which logically leads to some incredibly dangerous behavior, because if I'm bleeding, my singular focus is to stop the bleeding. But the bizarre thing about human behavior in the markets is that when we start losing, our immediate reaction is often to double down on the risk. Why is the immediate human reaction to double down when we are already losing?
It's this visceral need to heal the wound, essentially.
To fix it right away.
Right. The brain is screaming that it's in danger, and the only way it thinks it can return to safety is by getting that lost money back immediately. Right this second.
So it feels like we aren't even talking about investors anymore. When someone ignores their risk parameters, starts throwing more money onto the table, taking random wild trades just to recover a loss, that's just a gambler at a casino.
100%.
Chasing losses at the roulette wheel rather than a calculated investor.
This raises an important question about the fundamental line between investing and gambling. Because once that survival mode kicks in and the desperate need to recover just entirely overrides your strategy, you are no longer trading. You are gambling.
The strategy is gone.
It's out the window. And we've seen this play out on massive institutional scales, too.
Like the big Wall Street crashes.
Yeah, think about infamous financial disasters like the London whale or long-term capital management.
Oh, yeah.
I mean, these weren't orchestrated by amateurs on Reddit. These are some of the smartest financial minds on the planet, armed with literal supercomputers who lost billions.
Wow.
Why? Because a small loss triggered their ego, triggered that survival instinct, and instead of taking the hit, they doubled down. They increased their lot sizes, and they chased the loss until the whole thing collapsed.
So it's a complete collapse of discipline. The downward spiral is just your brain trying to save you, but actually ending up destroying you. But look, if our hardwired biological instinct is to gamble the moment we feel the pain of a drawdown, how on earth do we physically stop ourselves from clicking buy in the middle of a panic? I mean, willpower clearly isn't going to cut it if the prefrontal cortex is offline.
No, willpower is completely useless in the heat of the moment.
Right.
If you rely on willpower, you're already too late.
Yeah.
You need a systemic circuit breaker.
Okay.
You need tactical rules of defense established long before the amygdala hijack ever happens.
Okay, let's break down the anatomy of this defense system then. Because the first component the research insists on is predefining your risk. Risking only like 1 to 2% of your account per trade. But it's not just about the math, is it? It's about making peace with the loss before it happens.
It is. It's about pre-processing the pain. If you put a trade on and you haven't mentally accepted that the money might just disappear, well, every tick of the chart against you feels like a fresh wound.
That makes sense.
But if you mathematically cap it at 1% and you tell yourself, I am paying this 1% just to see what the market does, the fear evaporates.
Because you've already spent the money in your head.
Exactly. You've already grieved the loss.
Yeah.
Your brain doesn't need to trigger the alarm bells if the loss actually occurs because it was fully expected.
Here's where it gets really interesting, and I have to push back on the next layer of this circuit breaker, which is the hard stop loss.
Okay, let's hear it.
The idea that if a trade hits a certain negative number, the system automatically sells your position. But wait, let's say I've spent weeks researching a company. The fundamentals are pristine. I am incredibly confident in this trade.
Right.
If the market just gets a little jittery for an afternoon and the price dips briefly, isn't a hard stop loss just locking in my failure? Like, why on earth would I use that? Isn't it just a cowardly way of trading? Why not just wait it out?
I get that. It feels counterintuitive if you view the market purely as a math equation to be solved.
Right, because I know I'm right.
Exactly. Your ego says you're right.
Yeah.
But the market isn't a math equation. It's a chaotic system of millions of human emotions. A hard stop loss isn't there to protect your ego, and honestly, it isn't even primarily there to protect your capital.
Then what is it for?
It's there to protect your psychology.
By taking the decision out of my hands entirely.
Yes. When a position starts moving against you, your cognitive load skyrockets. You start bargaining with the market.
Oh, please just go back up a little bit.
Exactly. You start hoping. And hope is the absolute most dangerous emotion in finance. By setting a hard stop loss, you remove the burden of choice during the moment of highest emotional stress.
You just let the computer do it.
Right. If the market dips to your invalidation point, the system takes you out automatically. Without it, you leave the door wide open for that downward spiral of hope, fear, and eventual panic. By accepting the loss mentally before entering the trade, fear completely disappears.
It's like tying yourself to the mast of the ship so you don't jump in when you hear the sirens.
That's a perfect analogy.
But okay, what happens when the stop loss hits? You take the hit and you're just incredibly frustrated. You might not have lost your whole account, but you are tilted. Your blood is boiling.
That is where the pause rule comes in.
The pause rule.
It is arguably the most effective physical circuit breaker. The rule is, after 2 or 3 consecutive losing trades, you have to walk away.
Just walk away.
You shut the laptop, you step away from the terminal, and you do not look at it for at least 30 minutes, or sometimes for the rest of the day.
Because it takes time for the cortisol to actually flush out of your system.
Yes, it is a biological necessity. You cannot negotiate with a brain flooded with stress hormones. The pause rule literally forces you to fit out until your logical brain comes back online. It specifically prevents the account-destroying habit of revenge trading.
Right.
And when you finally do return, the best practice is to cut your position size in half during that drawdown period.
Which means the stakes are lower. If I was risking 1%, now I'm risking 0.5%. Lower risk equals less emotional pressure.
Exactly. Less pressure directly leads to better decision-making. You aren't trying to make it all back in one desperate swing to heal the wound. You're simply trying to execute a technically sound trade with very low stakes to rebuild your confidence.
To prove to yourself that your process still works.
Yes.
Okay, so predefining risk, using hard stop losses, walking away when tilted, and having the position size. These tactical rules act as like a great emergency brake to keep the house from burning down.
Hmm.
But if we really want to achieve long-term success, we can't just spend our lives constantly pulling the emergency brake in a panic. We have to rewire our brains so we don't panic in the first place.
That's the real goal.
And the research points to a massive paradigm shift that separates the amateurs from the elite professionals. Amateurs obsess over money. Professionals obsess over execution.
Right. It's the concept of process over profits. Amateurs derive their self-worth and their emotional stability from the daily P&L, the profit and loss statement.
If they make money, they're a genius. If they lose money, they're a failure.
Exactly. But professionals disconnect completely from the daily financial outcome. They evaluate their success purely on whether they executed their predefined strategy flawlessly.
See, I hear process over profits all the time, but it often sounds like a generic bumper sticker. Like, how does a trader practically rewire their brain to stop caring about the money they are actively trying to make?
By fundamentally changing how they define a loss. Amateur traders view a loss as a failure, a mistake, or even like a personal insult from the market.
The market is out to get me.
Right. But elite traders reframe losses as a business expense. They view it as paying rent.
It sounds like a restaurant owner buying a massive order of fresh produce. Some of those tomatoes are just going to rot before they get used. It's inevitable.
Yep.
The owner doesn't view the rotten tomatoes as a personal failure or a tragedy. It's just the overhead cost of running a restaurant.
That is the perfect way to look at it. Professional traders actually expect and plan for losses. They view those small, controlled losses as a subscription fee they pay to the market in order to find the winning trades.
Wow.
When you reframe a loss as a necessary business expense, rather than a personal failure or a threat to your survival, the amygdala doesn't fire. The pain matrix stays dormant.
And to enforce that, the research suggests something really fascinating. Journaling your emotions, not just your trades.
Oh, this is huge.
Right. Instead of just legging the buy price, the sell price, and the profit, you actually track your psychological state. You ask yourself, was my heart racing? Did I feel greed when I saw that green candle? Was I calm?
Because awareness is the prerequisite to control. If you only track your profits, you're ignoring the underlying engine that actually dictates your long-term success.
The emotions.
Exactly. By journaling your emotions, you start to recognize your own physical tells. You might notice that, hey, every time I trade after a poor night's sleep, my patience is thinner and I close positions too early. Because you cannot control the market. Only your actions, awareness of your emotions, equals ultimate control over your strategy.
You become an observer of your own mind. It's almost like mindfulness training applied to high-stakes finance.
It really is.
And then there's this vital concept of detaching from outcomes by thinking in a series of 100 trades rather than single events. It sounds like playing on a sports team. If you just stare at the scoreboard the entire game, you're going to trip over your own feet.
Right, you'll get crushed.
You have to focus on executing the exact play that's in front of you.
If we connect this to the bigger picture, the 100 trade series is the ultimate remedy for the survival instinct.
How so?
Because one single trade is statistically meaningless. It's essentially random noise. But over a series of 100 trades, a statistical edge will reveal itself.
Oh, okay.
By forcing your brain to evaluate performance over blocks of 100 trades, you remove the life or death pressure from the current moment.
So what does this all mean? How do we synthesize all of these tactics and mindset shifts into a mental model that you, the listener, can easily remember the next time you face high-stakes pressure?
Well, the research gives us an incredible analogy for this.
Right, the pilot analogy.
Exactly. It says that navigating the market is like being a pilot flying a plane through severe turbulence, emphasizing that the market ultimately rewards discipline, not raw intelligence.
Okay, but how does a beginner actually learn to trust the instrument panel when the plane is shaking violently, alarms are going off, and every single human instinct says to grab the controls?
Well, the professional pilot doesn't trust the instruments blindly. They trust them because they understand the mechanics of the plane, and they anticipated the turbulence before they even took off.
So it's about preparation.
Exactly. For a trader, your strategy, your risk management, your predefined stop losses, that is your instrument panel. Beginners panic because they didn't anticipate the turbulence. They didn't pre-process the risk.
But the pro is ready.
Yes.
Yeah.
The professional trader trusts their instruments because their emotional shield is already locked in place. By implementing the earlier steps, pre-defining risk, expecting losses as part of a 100-trade series, cutting position sizes, they build the trust necessary to keep their hands steady.
They know the turbulence is just weather.
Exactly. They don't try to fight the weather. They just maintain their course, trust their instruments, and let the process land the plane safely.
The extreme volatility is just noise. The discipline is what brings you home. I love that. So let's bring this all together for you listening right now. Whether you're actively trading financial markets, or maybe you're negotiating a complex business deal, or just navigating a high-pressure career moment, the ultimate takeaway is pretty profound.
It really is.
Success isn't about having a flawless, unbeatable strategy. And it isn't about being the smartest person in the room. It's about mastering your own emotional survival instincts. If the process is right, the profits or, the successful outcomes will inevitably follow.
It requires a deep, uncomfortable honesty with yourself. You have to stop fighting the external environment, stop blaming the market, and start managing the human animal inside you.
And that leaves us with a final lingering thought, something provocative for you to ponder on your own as you step back into your day.
Let's hear it.
We've established that human emotions like fear and greed are the primary reasons traders fail. We are flawed, emotional creatures trying to operate in these chaotic systems, but we are increasingly moving toward a world of AI-driven trading algorithms that feel raw emotion.
Right.
They don't feel physical pain during a massive drawdown. They have no amygdala, no fear, no FOMO, and no desperate, ego-driven need to revenge trade. So if human emotions are the primary reason we fail, will human traders eventually become entirely obsolete?
Wow. That's a heavy question.
Or is there a uniquely human intuition, a creative spark of pattern recognition when reading the chaos of a market panic that an unfeeling algorithm can never truly replicate?
I mean, that is the million-dollar question.
It's something to seriously think about, because right now the enemy isn't the machine and it isn't the market.
Yeah.
The enemy is the one staring back at you in the mirror. Master that and you master the game.